Well, good afternoon, Maverick traders. It's Joe with you here on a Tuesday. It's the 22nd of August. Let's jump into a market roundup. I've got my 2 cents on the markets. I'm going to share it with you. Take responsibility for the outcome. You guys know the drill. First off, I'm going to see if there's anything out there worth reporting, if there's any sort of event that could have changed sentiment. We're going to break down the markets technically to see if any new changes to the market up, down, or sideways might have affected sentiment, along with sharing some of the trades up, down, and sideways.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, you're going to see a couple of interesting things, at least I did. Now, the S&P and the Qs both opened much higher than where they closed, which gives me one of my favorite candlestick patterns. Let's jump straight into the daily news. A very strong bearish pattern develops, as we'll talk here in 1 second, but I did notice a couple of things that were different from the previous times I've seen the treasuries move as high as they have. Now, the 10-year treasury was flat today, but it's still around its 5-year high. Let's take a look at this chart here. The last time we saw a 4.33, 4.3 highs was right around October 23rd of 2022. Now, Darren and Rob both covered this on the weekend update, which I thought was great, which we did call pretty good here at Maverick, that the markets were going to fall apart here and have a pullback September, October of last year, where we're in the same situation when it comes to the yield about 2 months early. It's funny because today's the 22nd of August versus back here the 23rd of October. But we are still up at that same area. Now, I understand tomato, tomato. Let's compare them together. We've had a lot of interest rates up to that point. But when you pull up the volatility index in those same areas, you can see back in October when we had that first spike, we had a volatility index in the 30s, about 30, showing that there was a lot of defensive movement, a lot of fear, a market that was caught off guard, that ran for defensive plays, wanted insurance, not actively selling. Take a look at where we are currently, right around 17. This isn't a market that's trying to hedge itself or buy insurance. This is a market that's comfortably selling off into some of these higher numbers. We did come off a pretty good peak. We have now gotten away from our uptrend that we've been enjoying since March of this year. And this isn't a sentiment that is defending its position. This is one that's happy to hit the register. We'll see if that continues. So sentiment is moving to a selling stance versus a defensive one. How did we finish? Well, overall pretty much flat. Once again, the S&P and the Qs are showing pretty much flat on the day, plus 0.06, down 0.28. But where they started from, they did come off of the highs, giving this nice gap up or dark cloud cover I'm going to show you here in a second. The Dow opened pretty much flat and sold off all day. Russell slipped as well. Oil still above $80 a barrel, even though it did drop about 0.5%. Gold's just flat on the session. Moving down to the advanced decline line, you can see it really wasn't a general sell-off like I'd expect in the past that we've seen previous week, but we did come off of 2 up days. 58% advancing, declining, 37% advancing, with 5% just kind of staying sideways. So this wasn't a general sell-off that we've seen over the last few days. This was very specific, which a lot of it just was erasing gains with the morning's gap higher. Now, above and below the 50-day moving average does tell a little bit of a different story. We're back almost to that 75-25 that we've seen in the past when it comes to a pretty aggressive correction. Here we are at 73%, 27%. Now, let's just jump straight into it because I want to talk about the chart. And this is one of my favorite bearish patterns of all. Anything that gaps up and fails. Now, a couple of things that I want you to see. Let me go ahead and erase this line and zoom in a little bit. There is no tail on this candle, which means as soon as this market opened and it gapped up, sellers immediately came in and attacked this. This has been an active selling market since let's just call it what it is, since that downgrade that we saw a few weeks ago. And every time I see any sort of strength, you can tell by these shadows here, I'm seeing it met with selling. Now, I showed you that VIX chart, which means it isn't panic running to defend any of these positions. People are ready to abandon them, cash it out, go ahead and put it somewhere else. So this gap up and this move down, this is referred to as dark cloud cover. It's one of my favorite reversal signals. It comes in a couple things that have got me, or a couple areas that has got me very excited. We have a sloping 20-day moving average approaching a flattening 50, which once this crosses is going to give me an even better signal, but it is after a pivot or a bounce at support levels. So I could see this toy with the first line I drew up in here, and that's totally fine with me. Maybe gap up and try to come down again, or maybe do a doji. But what kind of sucks in these situations, and what I get really bummed about is I've got a nice bearish list, is when I see the next day do something like this. And it's upsetting because it makes me miss a lot of bearish opportunities that I could have gotten into, but I didn't get confirmation. Now my confirmation will be below the low of this day, and I'm hoping that comes over the next 2 or 3. I'd be fine with a couple of candles somewhere in this range here. That'd be great before it decides to roll over, giving me a little bit more opportunity to jump in bearish. Now the finishing volume shows that it is a hesitation day. Seeing the amount of selling that came into this market, or buyers immediately stopped, just gives me a little bit more of an ominous feel when it comes to these markets. Definitely on the bear side. Qs is going to be very similar to it. It does have that beautiful gap. This is a little bit deeper. It's actually touching. I love this touch. It's crossing over. It is below its resistance area here, and a confirmation below this area has gotten me very happy and more confident and comfortable to retrace at least this last pivot, or something a little bit more meaningful, something that could cause these markets to shake up a little bit. Now, when it comes to what we're seeing here, and let's go ahead and draw this. Corey drew a nice little head and shoulders pattern that could be developing here. It's just a market reversal on overall trend. This isn't something pessimistic when it comes to the economy. This is a very overinflated situation where there is a lot of money to be taken off the table without these markets really getting destroyed. I do not have a 200-day moving average here, but I imagine it's probably still going to be somewhere down in this area. So these markets do have quite a bit to give up and still retain a longer-term comfortable area. We'll see if that changes when it comes to any sort of sentiment between the world in different situations. So let's move over to the heat map. Kind of a mixed bag here. Nvidia down 2.77%. You got some banks that aren't doing very well, and a lot of the weakness was led by some of the banks and worries moving forward. We had some issues from China that might have carried over with some bonds defaulting. It's, hey, when people want to sell, they'll use any excuse to do so, and I'm going to just chalk it up to that. But this is active selling more so than it is any sort of defensive play. But across the board, really not much to report here on individual stocks. Where does that put me? Easily -2 for the week. This is one of my favorite bearish patterns. Doesn't mean they happen all the time, folks, but this is one of my favorite bearish patterns, so I'm definitely looking over my shoulder, or I should say focusing on my bear watch list. -2 on the monthly outlook, pretty easy. We've got a downward sloping 20 below the 20, below the 50. You got strike 1, strike 2, and 0, which is 20-50 slope, and that 50 has yet to turn yet, so I've got to get down to the -2. How quickly these markets can change, but those are pretty important levels that they did break. Let's move on to the potential trades. I did find some bulls, and check them out. The most defensive ones you can find: Visa, Boeing, and then Eli Lilly, which is the leader in Alzheimer's research and drugs. And so I think that's kind of what's keeping him in there. OKTA has been my potential neutral trade for a while, and NUE as well. Potential bearish trade, I just threw out a few that I like. But then after I put on my 5th trade here, I realized they all have very, very similar patterns. So just look for something that's looking like the overall markets. I did put XLY here as a potential bear. Please do not discredit the ETFs, because there's a lot of great ones out there that are very similar to the overall market trend. And if this does roll over and break, those would be super cool places to take some bearish opportunity. So what I choose on the upside, I liked Visa, and I think it was pretty cool because it had a little bit of a consolidation area in it, kind of this ascending triangle pattern in light of the weakness. Now, I know that banks have been struggling as of late, but Visa's a little bit of a necessary evil, right? They generate money on transactions as well as debt collection with interest rates. So this is something that I'm not running to jump at because the markets just don't have the sentiment to be bullish. However, a nice comfortable break above this descending ascending line here, or I should say descending highs, excuse me, or above a resistance here would create a little bit of a potential opportunity for it. So it's tough because I'm not really looking for bulls right now. This is NUE. I like this. It's got a channel, and when it comes to sideways in up markets and or down markets, take a look at OKTA as well. I have that for you guys to take a look at. It's on its way down. You really need to focus on these levels here. It's not quite there. It did gap up like everything else, but it didn't sell off as hard. So it's got a chance to hit the support about the 165.5 mark. That's why you got to give these things a wider range if you're going to play something sideways. I like the calendar spreads here, and I do like wider butterflies. Those are my personal favorites. However, condors are great. Just make sure you keep your risk parameters in check. Last one I'll show you, which I could show you all day, is a bear. This is First Solar. It's one that just really bounces around the community here. A lot of traders have been doing really well with it pretty much since this exhaustion gap, this retracement, a fall, a break below this, a retest into this island gap. Here's an island gap area where it came down, consolidated at. So it's been a pretty good bear opportunity. Every time this thing decides to gap up a little bit, it seems to get met with quite the selling. So here's the last little rollover. What I like about it most of all is down to this resistance here. It might be slipping lower. Sure, we got to take in consideration this low of the island gap, but overall, I just think it might just continue to float. It's in a very tough area, a tough sector. Solar is kind of a frivolous thing. It's not really something that everybody needs or has to have. It's just for those that want to try it and cut a couple bucks off. It's not a defensive play at all. So if these markets start to slip, it could be an opportunity to get more weak. So overall, guys, what do I got? So the market's set up a very bearish pattern, one of my favorites, and I'm looking forward to seeing how it kind of plays itself out over the rest of this week. Profit taking appears to be turning into something a little bit more. I'm seeing a little bit more fear. We had a couple of earnings missed, and a lot of companies punished, like Kohl's was one that I did not expect to be beat down that bad, if you want to take a look at the chart as KSS. So there's a little bit of reluctancy to stay in the markets, more so than defend yourself against them, meaning going in and running out, buying protective puts. I'm seeing just absolute abandonment based on those charts I showed you earlier. Confusing numbers overall. We're seeing the U.S. showing expansion based on the consumer. That consumer retail sales number, some of the stuff that we've seen has been high. We just had a GDP projection come out at 5.8%, which is massive expansion, but then we got manufacturing going the other way. We've got all sorts of things going on when it comes to U.S. economy. Could be the top. I don't know. We'll see what happens. China's slowing and struggling. They've got just the opposite problem going on. They've got a tightening consumer. They've got issues and problems when it comes to expansion and exports, things like that. So we'll see what goes first. We have the PMI, new home sales, and unemployment coming up, but then the Jackson Summit is something that I believe a lot will focus to, and I'm pretty sure that 5.8% projected GDP will probably be the topic. So we'll see what comes out of the summit. That's usually Thursday, Friday, and actually into Saturday. We'll see what Powell has to say about that. Earnings reports, we got Toll Brothers, Urban Outfitters, Lazy Boy. I'm sure there's a few out there. I'm kind of turning away from the earnings parts. They're good, bad. They're going to do what they do. But I think the overall motion of the ocean right now has been set in course, and we'll see if this is a little bit reluctancy, or I should say a little bit at the beginning of what could be fear of taking profits or something much more. All right, guys, thanks for joining me. That's what I got for today, and we'll talk to you next time.